Yeah, what happens on improvement exchange is somebody may sell a piece of property or a piece of an asset and then go acquire a new asset, but that new asset needs some improvements. So I sell $1 million crane, for example, and then I go out and buy a $700,000 crane. Well, I still have some extra money that I need to use, and I can do improvements on that within a certain time frame to get me to that $1 million mark or even greater. And so improvement exchanges are still allowing you to piece the parts together within a 6-month period. We see this a lot with people that buy new construction on real estate. They may buy a piece of land and start building on that until they use up all the proceeds from the original sale. So the improvement exchange, still a little bit of rules different, still need a qualified intermediary, still have someone help facilitate them, but all falls within the realm of a 1031 exchange.
Now, the types we're talking about so far are for the most part one-offs. You're doing one transaction at a time. A lot of businesses out there, much higher volume businesses, they're trading, buying and selling lots of assets at the same time, and that's where program exchanges come in, right?
Correct. Correct. A program exchange is where we see companies that buy and sell assets multiple times a month, multiple times a year, where it makes more sense for them to get in what we would call a master exchange program, a master exchange agreement with a qualified intermediary, where the purchase and sale activity is just ongoing. There's not a specific timed event that says I'm buying something and within the next 6 months I'll buy something else. They're buying and selling all day long. So what you need on a program exchange are a few other rules. We saw further guidance in the early 2000s that said here's how you actually facilitate program exchanges, and here's our what we would call safe harbor guidelines for a program exchange. But with that also comes tremendous complexity. If you could imagine running 10,000 sales a year and 10,000 purchases, all assets that are sold at all different times of the year, some that are 3 years old, some that are 4-year-old, some that are 8 years old. And then with the step in the shoes concept we talked about, multiple complexity. You ask why this wasn't used, why don't a lot of people know about this? Here's where you need the technology. You have to have technology to manage thousands of transactions, multiple ages, multiple depreciation schedules at any given time. And that's one of the things Accruit absolutely is a leader in the marketplace with managing these type of exchanges.
Which leads us to our next slide, is why should I use Accruit? Because obviously we're not the only qualified intermediary in the country. We do think we're the best one, but probably every company thinks that, don't they? Right. But there are some reasons why Accruit perhaps has a leg up.
Yeah, we've been able to actually segment the market into qualified intermediaries, those third-party individuals that just hold the cash.
Right.
They don't do much else except hold the cash. They make sure you're in compliant. They have the agreements. They watch your identification, and they also watch your the purchase and sale. But then what you've done is you've left these companies stuck with figuring out, how do I manage these? How do I manage these exchanges? What do I do with my remaining basis? What do I do with how do I know these are all like kind? Do I always have to pick up a phone and call a tax advisor? So we are the first company and still the only company in the country that has fully integrated the qualified intermediary services with a very highly technical technology that is now patented here in the United States. So that's what makes us really unique. Our banking structures are not just one size fits all. We work very exclusively with our banks and making sure we set a banking structure that works well for our clients. The other thing is our client services, our back-end solution, is you're just not going to come and talk to someone that says, yes, we've received your cash. We have a client service division here that actually works with our clients, maximizing their deferral and making sure they're absolutely in compliance to the extent that we're allowed to without becoming the tax advisor.
And it's one-to-one as well. You don't call a customer care center and hope you get somebody who knows your account. You actually know the person you're talking to, and that person knows your account.
No one will ever call Accruit and get India. I promise you that.
Now, this next item, you mentioned the patent earlier.
Yes. What was very unique is we filed the patent back in 2000 on our business process. And the Patent Office actually recognized that true uniqueness in the entire marketplace and gave us a very broad patent, what they call a pioneer patent out in the marketplace, of recognizing no other company has gone to the extent of managing like-kind exchanges through an internet platform, a technology platform like Accruit. And I'll tell you what's very unique about this and why this patent was given is this has helped create this industry that we're in today. This has allowed people to do exchanges for $35,000. It allows us to do over 250,000 exchanges a year through a patented process. So it is very unique. We didn't get a patent on 1031s. We got a patent on how we facilitate these. And yet we've seen no other company even try to come close to the way we facilitate exchanges.
Now, people who are coming new to all this may be thinking, there's a lot of unknowns here. This perhaps sounds risky, and we know for a fact that financial professionals are concerned about risk. We are as well. The asset level tracking capabilities of our process are unparalleled. You can see, especially if you're doing large program exchanges, you can kind of follow where the money is and where the asset is at every stage along the way. And so there's nothing hidden in there, and that dramatically reduces the risk that
Right.
you face.
Yeah, and we look at it cradle to grave. I think it's very important to be able to recreate the assets that were sold when the funds came in the subsequent purchase. What we also have is a relationship, what we call many-to-many. You have the ability to sell 5 pieces of heavy equipment, 5 dozers, and buy 1 dump truck. You have the ability to sell 25 sedans and buy 10 new cars. So with the complexity of tracking all that, what we have seen with our clients is their CPA firms really need a tool to help manage what's going on with all these different assets. And so the asset level tracking, we believe, is a must. At any given time, we can tell a client where their assets, what exchanges they were involved in, when the dollars hit, and where those dollars went to.
And this last one, I believe, is also something that a CFO or a tax director might care about.
Yeah, I don't see how they would be able to sleep at night if you didn't have good documentation. When we're talking about the type of deferrals of $60 million, $70 million, $100 million in deferrals for some of these companies, you better have good documentation. You better be able to press a button and say, show me what's going on with my like-kind exchange. So the documentation reporting is an absolute must, especially in these day and age where we've got to make sure we're staying completely compliant and transparent. It's very important to our clients that it's completely transparent of what's going on here. This is nothing that we're hiding. This is not a loophole. This is not a tax area that we're trying to hide from people. We want to be extremely transparent
Right.
in the documentation to